on the phone.
Mm-hmm. He's funny. Let me put this on in the corner then if he's gonna be on. It's gonna...
He is joining.
Yeah, I'm admitting him now. He knows it's like loose conversation. We're not doing no straight.
Yeah, I
like
told
that.
him it's a
Okay.
talk. It's a
Yeah.
talking form.
Yeah. Okay, cool. So I'm gonna go ahead and just let's start real quick.
Yeah, and did you send him? I had to send him the link. You didn't include him, but
I'm
because
probably in my bad.
square it out. No.
I wasn't
You
sure
do
he
what you
was
need to do.
gonna hop on. All right, let me work this. See, this don't work with me. Okay, yeah, that's just how it's gonna be. Okay. All right. Good evening, everyone. Welcome to our, I want to say our third installment in our series this year, where we have our small business educational series, and this is our third tax topic. And I hope you're picking up on the theme because we want to make sure that you're filing your income taxes on time, that you're being responsible, you're doing your bookkeeping, because we're hearing a lot from our members. I'm hearing anyway, that there are issues around keeping books, filing taxes. And so we figured we start this first quarter in 2024 fully focused on making sure you are complying with the IRS. Today is a bit of a more relaxed format. We have a tax talk, and we're recording it for your benefit if you were unable to join us. So I'm Shahiwa Jarrett Gellin, founder of the Broward County Black Chamber of Commerce, and we have our tax talk. Get it right in 2024. This is the year for you to get it right with your taxes. I'm just saying. So today we have with us some special guests. Our speaker today is Annette Lewis. She's a CPA as well as an MBA. When I looked that up, I was like, ooh, okay, I didn't know the MBA part, but yay. She is with S. Davis and Associates, has a decade of experience, over a decade of experience, and works with businesses large and small. Her clients also include large nonprofits. And I found this, Annette, that I thought this was wonderful. Serves as a board member, or maybe in the past, for the Foundation for Sickle Cell Disease Research. Just a fun fact about you. We also have the founder of S. Davis and Associates, Sean Davis, on the line. Maybe he'll say a quick hello, and I know he likes to chime in and make sure that they're giving you all of the pertinent information as it relates to all of our questions. Did you want to say hi, Annette and Sean?
Good evening. It's good to be here, and thanks for inviting us back. We like talking to you and sharing.
Perfect. Sean, you want to say hello? Oh, you're coming on camera. Yeah.
Yeah, let me just say good evening, everyone. Glad to be again a part of this small business workshop to help small businesses work through taxes, accounting, and we all know how important that is for small businesses to be able to get loans, to move their business, and to grow into big businesses. So we hope we'll give you some useful information today, and we're certainly open for questions and comments and other information down the line as well. So glad to be here, and thanks for having us.
Oh, perfect. And just piggybacking off of what Sean said, as we mentioned at all of our installments, it's critical for you to have your documents in order because once again, that's how you're able to get a loan, line of credit, grants, even during the pandemic and even afterwards. Some of them are requiring financials, as well as if you want to get certified with any government agency. And that's why we're doing it. It's also just important that you have your documents in order so that you can do projections. You can just operate your business fully aware of what's happening with your company. So with that, we're going to get into our tax talk and kind of take it topic by topic in a very relaxed way. So with that, What are some
Yes.
key deadlines that we need to know? What do I
Well,
file when? Help us out.
okay. Surely, one that we've already missed and hopefully folks have already, complied with is the January 31st. W-2s and 1099s should have been distributed to employees and to contractors, as well as file with the IRS. Bigger firms or bigger companies have until February 28th to file it, but most of us have to do it by January 31st. We tend to have a few, late filers, but as long as they get it in, most of them haven't had, much trouble with the IRS.
Okay, perfect. What's the
Uh,
deadline for businesses to file their taxes? Is
Yep,
that
that's the next item. That's March 15 for partnerships and S corporations. And that's changed. Maybe this is a third or fourth year, simply because partnerships and S corporations have something called a K1 that you need to file with your individual taxes, which is Form 1040. So it makes sense that that's due in March, so you'll have it in time for your April filing. And your 1040s and C corporations are due April 15th as usual. And then folks who are involved with not-for-profits, those are due May 15th.
okay?
But that's with a December 31st year end. If you have what they call a fiscal, which is not a December year end, then it's due the 15th day of the 5th month after the last day of your year.
Okay.
So, yes. So that one's the 15th day of the 5th month after your year end.
Okay.
And then, of course, if you're not filing on those dates, if you're extending, the recommendation, especially for partnerships and S corps, don't pay taxes. It flows through to your personal taxes. We recommend that if you think you owe, you have to pay. You have to keep in mind it's an extension to file the tax return, not to pay what you owe if you believe you owe. So if you owed in the past and it's gonna run you rough, nothing's changed much in your situation, you better, if you haven't been paying estimated, it's recommended that you pay in a few bucks when you file the extension. But those that are due, the returns that are due in March, the extensions take you till September. Those that are due in April takes you to October. And then the May 15th, which are the not-for-profits, takes you to October.
Okay. No, but
So
that's a good point.
Yeah. So, and we recommend, even though it's hard, if you can't pay for the return, you should file it anyway because they have layers. So you'll get late filing or non-filing on top of what you owe.
Okay.
So it's penalty and interest, and it accrues monthly, actually daily, because when they do the calculations, they work it down daily. So it gets pretty nasty.
Wow.
When you don't pay. And that gets into a whole nother topic as to how you pay, when you pay. And then, have you ever heard those commercials? Do you owe the IRS more than $10,000? Watch out for some of those companies, because we've had a few clients in the past that have paid a lot of money and no results. So, if it sounds too good to be true, just be cautious and check it out.
Nice. But I do want to just emphasize before we go to the next slide, that really good piece of advice, because a lot of people think, oh, I have an extension and it just extends everything, but it doesn't. It just extends your filing date
Yep,
not the fact that you need to pay something. So I
yep.
think that's very important for people to understand. I like that. Okay. So we'll hop on and as if I see anything, I'll, mention the chat, but we'll hop on to the next question. What can I write off? Give a couple of examples. And you see the little note up there, personal trips are no. So, just to kind of educate based on maybe some of the things you've seen people try to write off and then that they shouldn't be. And then, give us, some basics like, that should be obvious, but what you can, write.
Okay, if we're talking about in the business context, whatever is necessary to run your business. Some of the things that have changed are like entertainment. That's a no-no.
Mm.
So you can't,
Important to note. Okay.
so that's 20, I'm trying to remember, Sean, help me out. It's 2023, I think, is the last year that you can get a percentage or no. Meals have changed. Yeah, meals have changed. So the only meals that you can get 100% is for travel. So we, always ask our clients to be clear what the meals relate to, because we will just apply the rule. Okay, nope, you're not gonna get it unless you can show me, if you give us your ledgers, and let's say you're in California for a conference, and the dates and the meals, if we're looking at it at that level of detail, we'll say, okay, that's reasonable. Because whatever position we take, we have to be able to defend it.
Yeah.
Because we can get penalized too. And the penalties start at like $10,000. So we're not going to.
Right, we're not going there.
So that's one thing. If you're feeding your employees, let's say
write this down.
we're hourly employees and we go past, even though it's overtime, we're great employers. So we'll buy you dinner, stuff like that. If you're having your Christmas party and, those, or let's say we buy coffee for the kitchen, those things that are for employees, you can write that off. And we see that a lot.
Okay.
You can't get your groceries at Publix, and we can see those patterns, and we'll ask you just to make sure, and we will say no. You're going to a conference and you turn it into a vacation. Don't be surprised if we ask you for, the conference, the backup. Let's see registration. Let's see, the agenda and what have you. Just because if it's a big number, so stuff like that. For home, your office, business office and home. If you don't get W-2s, if you get 1099s, okay, let's talk. If you have a W-2, which is kind of bad for people who are remote workers and are W-2s, but unfortunately, you're kind of stuck, especially when they don't have the option. So unfortunately, we can't do much with whatever they spend.
Right.
And then, that sort of a thing. If you don't know, ask or Google it.
Yeah. No, it's good. It's funny because most people who start a business are under the impression that, hey, I can write up everything except, which should be obviously the purchases that are made solely for you, in your personal use and time. But that was a really good insight on the food or entertainment kind of change, because a lot of people still think like, yeah, I can buy lunch. I can.
Yeah.
For
I
me.
mean, but and now that when you say that, what we tend to see is like business startups or people who aren't managing their monies properly. You should have a business account that's separate from your personal account. because some people will have the business account and all the revenues come in and they'll pay their mortgage from the business account. That's a no-no. You need to pay yourself. So one of the first things, we used to do these presentations for, the small businesses, Miami-Dade, Broward, Palm Beach, some of those, small business divisions. Pay yourself something, figure out your budget as to what it will cost you to live. Don't pay it directly from the business account, because if the IRS thinks you owe them money, they will take it from any and all accounts that you have. So be careful to separate all your activities. Personal stays with your personal bank account, business stays with your business bank account. Transfer monies, be careful and always have a memo if you're transferring. A lot of us don't write checks anymore, but certain banks are better at giving you that little space as to where to write the reason for the transfer. But be careful with that, because that can get you in trouble.
No, thanks for the advice. This is that's interesting. So any background on why were people just taking advantage of the entertainment piece? And is that why you kind of have this pullback on what you can write off, in that case?
People wine and dine their clients, and I think it may have just gotten abusive.
Yeah.
You have that box, the heat box down there, and
Yeah, exactly.
that's like buying a condo based on the amount of monies that you're paying, and
Right.
then
So that's a no now, and then you're saying
yeah,
no.
that's not no. Yeah.
Wow. Wow.
That's
So taking a client out to go ahead. Sorry.
I mean, if you're having a business meeting, you have to document that, John Brown was there, Susie Lee was there, what you discussed. I mean, you have to be keep meticulous documents, especially if that is a part of your business and how you get business. You just have to, and that's business meals, not entertainment. So it only has to be the dinner. It can't be, going to, how some stadiums will have restaurants in the stadium.
Right.
Because if it's in there, you're going to think, oh, so where are the tickets? So things have to be separated.
Right.
So you see that this is just the meal portion. So you just have to be careful.
This is really good advice. That's really good, because I don't think a lot of people realize that. Okay.
Yeah.
Wow. Okay. So the next one is tax credits. Do I qualify? If you just want to highlight a couple, I know that, tax credits can be complicated or complex rather. If you want to just go over a couple that you've seen your clients ask about, or maybe that you've been able to utilize for your clients.
Well, on the individual level, and you've been hearing it lately, child tax credits. Some of those, there's some credits that reduces your tax liability, and there are some credits that will actually give you cash back in your pocket. Like child tax credit, that's one of those that will actually give you money in your pocket. Earned income credit is one of those. Folks who have child care. Those are three that I can think of the top of my head that are credits that will give you back physical cash if you exhaust all of, let's say your liability is $1,000, but when you add the credits together, it's $2,000. You'll get the difference back, so you'll can pocket the extra $1,000. Business credits off the top of my head that that we would typically have. There aren't many that I can think of. Sean, can you think of any? My brain is, yeah, my brain is kind of struggling now because there's so many of them have expired. 22, 23 time
I
kind of
see.
time period.
I see.
So yeah, so we like another big one that was going around is the employee the ERC. I'm trying to remember what the ERC stands for. The reduction credits.
Oh, okay.
That was abused, but one of the big
Mhm.
misconceptions is that you have to have W-2 employees, and
Mm.
we can get onto the road as to what's an employee, because a lot of us will try to save money, hiring people as contractors when they're in fact, an employee. But, stuff like that gets a little tricky because it's how you an employee versus a contractor. It's the general rule is the payer, who is the employer or the person who's hired them, has the right to control or direct if you're only controlling or directing the result, then the person is a contractor.
Right. We're gonna get to
Because
that and that. We're gonna get to
yeah,
that.
yeah. So on the credit side, let's see. I think I'm done with that for now. I can't think
Okay.
of any.
That's
But
fine.
deductions are, pretty much similar to expenses, deducting expenses pertinent to your business. If you're not a sole proprietor, you register your business on Sunbiz, that's a deductible expense. You have to pay for licenses, you have to pay employees, you have to pay contractors, those kinds of things that are expenses directly related to the business are deductions that you can take.
Perfect. Okay, well, we'll move on. I'm sure you may, get a question or two. We'll come back to that. And here you go. 1099 contractor versus employee.
Oh,
What's the
wow.
difference? What's going on?
Okay.
What have you seen how this has gone wrong?
Well, some of us, when we realize that, we're trying to save some money, so we hire, let's say, a receptionist. Receptionists tend to be, employees, especially if you have a 9 to 5 and they're full time. You control what time they come to work. You control what they do, i.e., you answer phones, you file, you go to lunch at 12. That's an employee. Let's say you have a contractor who is somebody that, okay, I need somebody, 20 hours a week to do some filing. You can pick what days you come in. This is my filing cabinet. This is my stack that I need you to file alphabetically in these file cabinets. All you want is this is the result I want. Here's what I need you to do. So those are, easy peasy differences as to an employee who will get a W-2. You have to pay payroll taxes, which means you have to pay Social Security, Medicare. You have to, workers' comp and SUDA and federal unemployment insurance and state unemployment insurance taxes. The employee has to do the withholding and their share of Social Security and Medicare. Miscellaneous, a 1099 miscellaneous, they have two now. They have what they call an NEC, which is a non-employee compensation, and miscellaneous is just really for things like royalties, because it just got a little muddy. So they introduced the NEC. a few years ago.
Okay. Boy, you gonna really have to keep up with some stuff. Okay, but that's good to
Mhm.
know. That's really good to know. For those of you who just joined us, if you have questions, you can, drop it in the chat. It's kind of a loose flow to today's program, our tax talk program. Okay, so I know we have discussed this in the past.
I'm going
So
to
so
question.
let's just tackle it because obviously people figure, well, if I lower this, income here or increase the write-offs and therefore I have no profit or what have you, then I'm not paying any taxes. I'm, hey, I got it made. So so I want you to kind of explain why it is important to have profit. I think we should all know this is a business setting, but why it's important to, have profit, and so that we stop trying to lowball the IRS here and we just really get on it. So we love our deductions, we love our credits, but tell us that is it important
Okay,
to have a profit?
let me give you an example that I've seen. And you're a sole proprietor, right? Which means you're not a corporation, you're not an LLC, you're not any of that kind of thing. You're just the guy who, whatever you do, your cleaning company or you're just cut grass or whatever. And, you do your thing, you don't declare any profits. So you're not paying your social security. You have zero profit.
Okay.
10 years later, you want to buy a house. Okay. You go to the mortgage company, the lender, whoever, and they say, okay, let me see your tax return. They're like, you don't make any money. How are you going to pay the mortgage?
Exactly,
So
exactly.
it comes back to bite you, especially, when you're not, especially when you're not showing that you're paying yourself, because you might end up with little profit because you're paying yourself properly, whether it's, be by a 1099 or a W-2 or whatever the case may be. But if you can show that you're compensating yourself, at least, profit is good. Yes, you have to pay your taxes, but it also helps you down the line when you need to, expand your capital base, expand your assets, because you are profitable. If you want to invest or even sell your business, if you don't have any profit, you can't sell or have anybody invest in your business, for
Yeah,
instance.
that's a good point too.
So,
That's a really good point. And I, just kind of wanted to, make sure we covered that because there's so many other things that you're not going to be able to do. For instance, we had this whole crazy thing with COVID, and now the government has PPP, but well, you don't have any profit. So now you can't even show that there's a loss,
right.
for your company, and so you get put in a bind because there's an actual loss, but don't really have the documents to establish that. So.
And let me tell you a tricky thing, as you mentioned, loss. The IRS can do this. I haven't seen them do it much. Um, Probably only with people who have a W-2 along with a Schedule C. Sole proprietors file a Schedule C. If they look at like the last 3 years, or they look at the last 5 years, and 3 of the 5 years you have losses, they can say, sorry, you can't get the loss. It's a hobby. It's not a business. So, there are little loopholes where if they're monitoring, now that they're staffing up, they can, look at that and say, hey, nope, sorry.
Wow.
That's not business, that's a hobby. So you can't get to take those losses anymore. So form a business because it's harder for them, to say it's not a business because you've incorporated and you're paying your according to the state secretary of corporations and paying your fees and whatnot, you know. So that's another thing that the IRS can get you on.
Wow. No, that's a good point. I don't think many people think about that. Wow,
No.
that's a really good point. See, we're getting all these really great nuggets. All right. So I'm just saying, and that, you have your CPA and your MBA. Sean has, his CPA. Certified public accountant for those. Mostly everybody, I'm sure, knows what that is on the call. But we have to be real. We have to be honest. There is a lot of advice out there on social media. You have people on TikTok, on Instagram. Oh, here's a little nugget. Did you know the IRS has this credit? Did you know that, and so people are inundated with all this information about how they can get around paying taxes and did you know about this deduction and this credit? And this really tricky, cool thing you can do to reduce your tax
Do you
obligation.
know? Do you know that the IRS is on social media checking out these people because there are stories, true stories,
Wow.
where, I had this bash on South Beach where I made, 100 grand doing this party and blah, 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 blah. When he
Wow.
filed taxes, he said, he only came up with $40,000. The IRS says, hey, you made 100 grand on one party down in South Beach, so you said it on social media. So
Wow.
beware. And if it sounds too good to be true, it is. Don't take it because it's on TikTok. You need to, do your homework because you can get into trouble. And I'll tell you what, not all tax preparers are, there's some of us that are unscrupulous that will. I know somebody who's very close to me.
Wow.
And it happens to us too. People shop around to find out how much of a refund, they can get. And we've had some clients here that have left. I have no other tax preparers where it's happened, and then they come back because the person or company that they went to messed them up.
Wow.
You'll come back and say, oh, I didn't know that you have a house or you bought a building. It's like, what are you talking about? It's like, you have mortgage interest here on your tax return. Oh, I don't own a building. So some tax preparers just put stuff on the tax return so that you get a refund or a bigger refund. And at the end of the day, the burden is on you, the tax payer, as to what goes on the return because you signed it. So you're attesting that, hey, this is true and accurate. So, make them go through it with you to, just to have a sense of what's on your return.
Yeah.
Don't just look at the big refund and cry if you have to pay, because it could come back to bite you.
Right.
Oh, IRS has something called the P10 program.
Oh.
I'm sorry, IPPIN program, which is an individual PIN number.
Oh, okay.
You can do it voluntarily. If you do it voluntarily, you can opt out. But if the IRS puts you in the program, that means you have had identity theft, or they suspect that your identity has been compromised. And that's where you'll get a letter every year, typically by January. Some people, there have been hiccups and it comes later than January, but you will need that to file electronically every year. So it's, a PIN number, an individual protection PIN number that is necessary to file your return. So that's another thing that some people don't realize, especially when they don't open up those IRS envelopes.
Right. Well, yeah, right. No, that's true. Kind of avoiding what they think may be in the envelope as opposed to what actually is in. So we've covered a lot, and that was really good advice too. I didn't know about this PIN IP. So it's I as in ice, and then P as in personal, and then PIN program. Okay, I'm gonna look that up I didn't know about that.
Identification, personal PIN number number from the IRS.
Okay.
That's only if you've had fraud or theft or whatever that the IRS has determined.
Okay.
Right. And you can register for it yourself.
Mm-hmm.
And when you do it as an individual, you can opt out when you wish.
Okay.
If the IRS, like Sean says, register you for it or do it for you automatically, you can't opt out.
Okay.
You just until forever or until
Right.
they think there's no more danger.
Well, that's good to know, just because, so many people have had to deal with identity fraud, and it is difficult to clear up. So they may want to do that, voluntarily, on their own. So this has been an interesting conversation. We've talked about, you know, the credits, the deductions, some of the things to avoid. Obviously, not taking TikTok advice is important. But is there anything else you'd like to share before we kind of open it up for questions as tax professionals, talking to, small business owners, just sharing perhaps a couple, pieces of advice to ensure that people are doing what they're supposed to be doing, or even a warning, something you've seen, and you want to say, hey, just make sure that you're doing X, Y, Z, to avoid being in trouble, being unprepared, or getting yourself into a bind with the IRS. And then we'll turn it over and see if anybody has any questions today.
Yeah, I think you kind of covered, the basics in the beginning, that, they need to have the record keeping, the bookkeeping, the accounting. That's very, very important in terms of getting your information together in order to file with the the taxing authorities, whether it be state or federal. One thing is tax records. We suggest, 3 to 10 years, because you can amend up to 3 years back. 10 years, they can assess it, because a collection period is 10 years from the date that you file the return. Some people who don't file for years, it's like 6 years to be in compliance with the IRS. But if they suspect that you owe, then it goes back to however long they think you owe. Oh, and an interesting nugget is, if it's past the 3 years, if you get a refund, if you're entitled to a refund, they keep it. So, yes, they started to really crunch down on that, because I had a client who hadn't filed for like 6 years.
Wow.
And a few of those years she had a refund, they kept it.
Wow.
Nothing offset anything. And the years that she owed, she had to pay it.
Wow.
So file those returns, because the refunds after 3 years, they go away.
Wow. That's good to know.
Annette, did you want to talk at all about PPP loans and fraudulent? I know nobody on this seminar on this seminar has dealt with this at all, but where the IRS and the government is with amnesty and coming forward, and you've seen it in the papers, you've seen it on the news as it relates to those that didn't qualify for those PPP funds, and they did auditing of it, and they're continuing to do auditing of it.
Right.
And they will continue to get those that didn't earn and didn't meet the criteria to get those dollars. And that, you want to just speak on that real quick?
I think you just said it at a high level. And, for folks who didn't use the money, as I hear, some people are turning back in those dollars. And even like the ERC monies as well. Some people who aren't entitled to it ended up getting it, because it was such a manual process. And, they change the rules every so often as they start to process some of these PPPs and ERCs. So it was learning as you go along. And of course, the big splash in the news where, you know, you buy a Lamborghini and
Yeah.
that's not cool.
That's not
And the small business got cut out. And then, of course, they did that second tranche. But, you know, I'd forgotten about that, where folks who misrepresented or lied on
yeah.
those applications, you know, there is an amnesty program to return the monies or to fess up and, you know, work with the IRS into, you know, giving back the monies and not go to jail.
Wow. Yeah. Sean mentioned it. Amnesty period.
Sean, do you remember?
You mentioned it. Amnesty.
What was the question? I'm sorry.
The amnesty period.
We'd have to look at that amnesty period, but if you fall in that boat, hurry up.
Yeah.
That's interesting. I guess I missed that. Wow.
Yeah.
Okay.
Yeah. So recently in the news yesterday or this morning, I saw that there were some, I don't know if it was BSO. I think it might have been BSO and maybe some other police officers who had gotten the money.
Yeah.
And they're actually gonna need to pay the money back and do jail time and lost their positions. So again, you had to qualify with employees, not fictitious employees. You had to have a downturn in in different periods of payroll that you had for looking at 1 year compared to another.
Right.
So if you met all of that criteria, you were able to get these funds. And then if you use the funds that the way they were intended to be used, you would have the forgiveness. So you wouldn't even have to pay the money back.
Right.
But there were folks that had no employees. If you did not have employees, and this was to help stimulate the economy.
Right.
If you did not have employees, you did not qualify to get this money. If your business increased during the pandemic, you didn't qualify.
Yeah.
So, you know, there was a reason why the government gave this money out, and folks thought it was, you know, it was free money at the time, but there were criteria, and there's always going to be nothing. If it's too good to be true, it is. So this is what we call a clawback.
Yeah.
They give you the money based on what you've gotten, and it maybe slipped through the cracks at the time, but then they go and they do the reviews. And if that doesn't, they talk to interagencies. So you're talking to the state of Florida. You're which has your payroll.
Right.
You're talking to the IRS, which has your payroll. You're talking to other entities that you may have had to, you know, you may have had to give payroll to Broward County. All of these guys are linked up now. So you're not you know, it's short-lived not to do the right thing.
Yeah.
But again, as I preface this, it's not anyone we know that's on this call, but for folks that are out there that have done this kind of thing, there is an amnesty period. And I believe that amnesty period is closing. Don't know exactly the timing on it, but you may need to, if it's that person or that company, or maybe not even a fictitious company, maybe the company's not there. You have to, there's requirements that you have to file with the state. And if you do business in other states, you have to file with those states. If there's no record of any of that, if there's no payroll of any of that, but you submitted documents through someone, understand if you got that money or somebody did it on your behalf, but you got that, you're going to be liable.
Yeah. No, of
and
course.
You're going to have to pay the piper. So that's one of the hottest things coming out now. I will also tell you, one of the things they like to do during tax time is make examples of people. And specifically, accountants and lawyers and
Mm,
other folks, professional, high profile individuals, so that during this period, oh man, that guy got caught. This guy was a high CPA. This guy
right.
was an attorney. This guy was this, and then you see him in the front page of the news.
Mm,
They do that on purpose to scare and to concern folks to say, hey, they got that guy. They may come after me. Let me do the right thing.
right, right.
So,
Wow.
and I haven't seen it yet, but trust me, in probably the next month, you're going to see somebody get hit
Mm,
for IRS tax evasion or whatever the case might be. PPP loans are already in the news,
yeah.
and they're doing that with these folks. So just be concerned and be mindful and do the right thing.
Oh, thanks, Sean. That's interesting. I didn't know I didn't know that the amnesty part. That's really interesting. But we are at the point where, hey, did we miss something? We talked about all the filing deadlines. We talked about the 1099 versus an employee, the contractor versus employee, deductions, credits, some of the changes as it relates to, you know, the perks I think everybody in business loves the entertainment and getting to write all the lunches and fancy things off. And Annette informed us, no more of that, no more of that. But if there's something that you feel we didn't cover, I mean, I've learned a lot. It's crazy how the tax code really does change. It really is fluid, and you all really have to keep up with a lot. But if we miss something, hey, it's your turn out there to ask a question. Let us know if you have a question. If not, we will say good night. Anybody have a question? I think we were thorough. I think we were thorough. All right, well, I just want to oh, okay, go ahead, Dr. Gray, and ask your question.
Thanks, Shahiwa. So my question was, in terms of documentation for business expenses, do you have a app that you recommend to keep your documentation in for like your receipts or different things? Do you have one that you would highly recommend?
Actually, I don't personally. QuickBooks has some apps tied to it. I don't really fool around with that, or I don't get my hands in the weeds like that. But I mean, I can ask around to see what other people use, and I can pass it on to Shahiwa.
Okay. Thanks, Annette.
So just to answer that, I guess, like Annette said, your QuickBooks usually has it. There are some apps that allow you to take pictures of what have you. You also you can go to Office Depot and get a journal. One of the things that's real important is the calendar. Is your calendar where you go and you meet with people and you have trips and you have mileage and you have food and you have other expenses and you write it down, or you keep it on an Excel spreadsheet. That's important. If you ever, unfortunately, get audited, and it doesn't mean it's a bad thing. Just because you get in a letter from the IRS audit, the IRS wants to scare you. But we as professionals, we deal with that day in and day out, and we can deal with that. You just need to have the information that the tax law requires. Who, what, when, where, and why. Those are what's important for you to have in terms of supporting those expenses for business. And as long as you have those and it's justifiable, those will be expenses that you can take against income that you have in your business.
Yeah, we encourage our clients to use, a debit and or credit card strictly for the business. So it becomes easy to, on a monthly basis or every so often to just sit and mark it up. And that way you get to see too where your money is going before the end of the year. And at the end of the year, one of the ways we reconcile is just run the annual report, because credit card year-end statements, American Express, Visa, will have them in buckets, and you go, wow, I spent this much at the coffee house. I spent this much getting supplies at Office Depot.
Yeah.
I mean, I take pictures of receipts and have them in the album on my phone, and I don't necessarily use an app, so that's what I do personally. But like Sean says too, you're going to meet with Shahiwa for a business lunch to discuss XYZ, and the invitation goes out. That's also, a good way,
Yeah.
because sometimes the IRS wants to see your calendars. Do you have a trip calendar? And those are good ways to back up, because you might, scan the receipt or, picture the receipt, but you didn't write who was at the meeting.
Right.
But when you look on your calendar, like Sean says, oh yeah, it was Annette, Shahiwa, Sean, and, other people from the workshop. So it's easy to go back to.
Good advice.
Thank you.
You're welcome, Dr. Gray.
All right, perfect. All right, well, if there are no other questions, I just want to say thank you, as usual, to our resident CPAs here at the Chamber, S. Davis and Associates. Thank you, Annette and Sean, for always making yourself available. Before we go, I'd like you to just let the people know how they can reach you.
Well, I thought you had that info on okay. I'm Annette Lewis, as she said, and S. Davis and Associates. My telephone number 954-927-5900. The office address is 2521 Hollywood Boulevard, Hollywood, Florida 33020. That's our HQ office. My email address is alewiss@sdaviscpa.com. You can go to our website at sdacpa.com, and you can find a whole wealth of information about the management team, the services we offer, where we've been, what we've done.
Nice.
Because you can see Shahiwa got her picture, so obviously she visited our website. And she knows us for a long time. So Sean.
Well,
No,
good.
again, we're excited about this opportunity to present to the chamber members. Having been a chair of a chamber, president and CEO, not a CEO, but chair of the chamber, I know how important it is. We provide all the services. We can, if we don't have it, we can refer you to somebody. Again, our website, sdaviscpa.com, and certainly trying to keep businesses doing business amongst itself. So thanks again for the opportunity.
Yeah, no problem. Thank you all. Well, also for those of you who may have come on a little later, it'll be on our YouTube channel, and we will also send this out in the newsletter just so you can see the entire video. It was good to kind of have a laid back talk about some of the topics that can be complicated when it comes to filing your taxes, record keeping, etc. And we'll also be sure to post Annette and Sean's information along with the video. So thank you all for participating. I did want to end by just showing you a couple of our upcoming events. Literally, this is a busy week. Tomorrow, we have a grand opening for one of our members, Wisdom Senior Care Premier Center, at 11 a.m. We have a general body meeting and new member orientation on Thursday, March 14th at the City Hall in Miramar. We'll have a reception, have our orientation, and when we have a speaker, Florida House Representative Marie Woodson, who will give us a wonderful legislative wrap of what happened in Tallahassee as it relates to laws surrounding business and small businesses. And then next week, Saturday, we have a fun event brought to us by our Health Equity Council in the chamber. We have our Spring into Health event. We're going to do some Zumba yoga, and I guess just a mini boot camp, and a kind of a meetup. So please join us at these events, and you'll see all of them in the newsletter along with the links in our newsletter and all of our social media handles for you to sign up for. So with that, have a wonderful night, and I'll see you at our next event. Thank you, Sean and Annette, again.
You're welcome, and thank you again.
All right, good night.
Thank you. Bye.
Hey, Mike's iPhone, you didn't have any questions? And do my damn hair. Let me stop recording.